Looking back in and coming back over, I mean, how do you view Ukraine and its challenges and I guess you've sat through a whole day of the conference like myself. I mean, what's missing, perhaps?
Well, first I'll want to say about maybe what's there. For me, the change has been overall positive, but I've been absent maybe for too long, so I don't see this more like intra-monthly, intra-yearly dynamics of how the reform process is going. And as Tim mentioned, I work for BIS, and it's an organization of central banks, where central banks are our shareholders, and we manage central bank reserves and provide some investment vehicles for them, facilitate foreign exchange interventions. We also host the standard setting committees like the Basel Committee. And I work for a committee on the global financial system, but it used to be called the Euro-Dollar Standing Committee. So one of our jobs is to inform the governors about Euro-Dollar offshore lending by banks, what's going on in international bond markets. And in that context, I just wanted to kind of delve a bit more into the positive aspect of this recent bond issuance that Ukrainian government just undertook. So the yield was about 400 basis points, which is the spread relative to Treasury was about 400 basis points, which is like pretty high. But we should also remember that it's very long maturity, and being able to issue a long maturity bond in and of itself, especially less than 2 years after a massive debt restructuring, should be seen as a big achievement. Why is this important? Well, previously, if you look at the BIS statistics, hardly any of Ukraine's outstanding debt was above 3-year maturity. So there was not even a prospect of forming something like a benchmark yield curve in the dollar for foreign institutional investors. Also, long maturity means that Ukrainian government has reduced rollover risk for its financing. This is very important because, as Andrei has mentioned, financing the current account deficit is extremely important at this point. It constitutes a key financial stability risk in the medium term, and Ukraine needs stable, long-term foreign currency inflow beyond what official lenders can provide. And finally, there's been quite a bit said by Sergei and also others about the current extremely accommodative environment globally. And again, here, the maturity of the debt matters a lot. Why? Because the monetary policies of central banks like Federal Reserve, Bank of Japan, ECB, that expanded their balance sheets massively, that keep yields compressed, worked extensively on the long end of the curve. That's where the benefits are highest for borrowers. And Ukraine has now actually managed to reap some of those benefits in the form of this issue. In doing so, as you know, part of the deal was also buying back some of the shortly maturing debt. This time, what did the government do? They bought it at a premium, at higher than the par. However, issuing long-term debt could be quite advantageous for Ukraine's foreign currency inflows and financing, because as central banks unwind their balance sheets and global yields rise, some of this debt could be bought back at a discount. Instead of buying back own debt at a premium, we could buy our debt at a discount and refinance that way. And I think a smart treasurer would take the medium-term outlook for global yields into account, and this bond issue fits into this picture. And finally, of course, this opens an opportunity for Ukrainian corporates to also tap longer-term debt markets and start returning to global debt markets, given that the sovereign is now active at the long end of the curve. What were the positive developments that predicated this debt issuance, made it possible? Well, if you read Moody's commentary to why they upgraded the rating for Ukraine, it was fiscal reforms and external position. So if one thinks about, well, what should we emphasize going forward and where should priorities be, it should be on the type of reforms that go into the same direction to make this market access sustained. So of course, pension reform will further improve Ukraine's fiscal position. I mean, right now, Ukraine's pension deficit is like second highest relative to GDP in Europe. This is unsustainable. And external position. So there, this is much more difficult. Agricultural reform, for example, would be needed because that's a key export sector for Ukraine potentially. Now, I also agree with most of the panelists that even though these reforms so far have enabled Ukraine to tap the global financing once again, the backdrop has been global liquidity and this ease of financing. If you think, what is the other country that has bond spreads of 400 basis points? It's Argentina. What did they do earlier this year? They issued a century bond. So it says much less about Ukraine or Argentina. It says much more about the current accommodative liquidity conditions. So in that sense, it's even more important, I think, to use this global liquidity to Ukraine's advantage and try to maintain and access to the long-term financing now, get foreign currency inflows to finance current account deficits that are expected to persist over the several years, and hopefully also lead the private sector in being able to raise foreign currency funding as well.